All right, let's talk about the Oklahoma City housing market because right now what we're seeing is just a little weird out there with all the moving pieces. Rates have been drifting down, but demand isn't spiking higher. And with buyers being awfully quiet, home prices aren't dropping either. So everybody's wondering, Joel, are we going to see this housing market crash, or is next year going to be another awesome year as far as home gains go? So everybody, here's the thing. The market, it's not dead. It's just different than what we've seen in the past, just a few years ago during the pandemic where you could list something, it's super euphoric, 24 hours goes by, and it's gone. Now it's just more of a normal market. Builders are shifting strategy, and buyers, at least the ones still out there shopping around, they're a little bit more picky. So in this video, I'll break down everything that's actually going on, not the headlines, not the hype, the real story behind what's happening here in Oklahoma City right now. So let's start with the money side of things because everything trickles down starting from there. Homes are expensive, so a lot of people borrow money, so mortgage rates are a big indicator for future demand on where we could be heading. And with mortgage rates, what we see is that they're stabilizing out. They're sitting in that 6 to 6.5% range, depending on who your lender is, what your credit score is. Are you buying points? Are you taking points? So overall, that's a whole lot cheaper, a whole lot better than the mid 7% chaos we had just last year. And then once you zoom in on the Fed, with the Fed, they're still fighting inflation, but there's this growing divide from within. Half of them feel pretty good and accomplished on what they've done so far in regards to inflation, leading them to want to be more flexible, ease financial conditions, cut rates. And then the other half, they still see inflation issues down the road from tariffs and whatever else. And the Small Business Holiday Outlook, this is a survey done by Constant Contact where they surveyed 1,800 small business owners. What they've seen is, of them, inflation and rising cost concerns were of 32% and weak consumer spending of 22% were of their top concerns heading into this holiday season. So many businesses said that they're absorbing higher costs through December, doing everything that they can to keep costs low in one of their busiest seasons of the year, which for 60% of these small businesses, the holiday season accounts for up to 50% of annual sales. They're going to do what they can to get through now, but then once January 2026 rolls around, a lot of them are planning on raising costs, citing inflation and economic pressure. And this could be one extra detail Fed members could be looking at when they're deciding whether or not they want to cut rates. So this is an argument against it because this is an example of more inflation in the future drifting further away from the Fed's 2% target. And then speaking of costs increasing, this one hits home. This is energy costs. Oklahoma Gas and Electric, OG&E, just announced rate hikes going into next year. So we're talking higher base rates tied to infrastructure upgrades and transmission costs. And that's on top of already rising insurance premiums, property taxes, grocery costs. We just can't get a break, everybody. So this is why everyone's really paying attention to what the Fed's going to do come in, 29 days, 1 hour, where they're widely expected to cut rates. So this is what they're planning on doing at next meeting. 67.4% expectation of a rate cut of 25 basis points or a 0.25% cut come December 10th. But once you start zooming out, if we try to look at December of next year, this could move, there's so many different factors that can move all of this. So this is more foggy. So everybody's really wondering, all right, where is this neutral rate going to fall? How low will rates going to go? And all of this matters because, especially locally, because cheaper money means more buyers coming off of the sidelines, more demand. Now, let's get into more of the numbers side of things. So once we pull up my showing time and we look at all price ranges, single family, we're building out the median here. 1,500 to 2,000 square feet, 3 bed, 2 bath. What we see is median prices are around 250,000. They're basically flat over the last year. but they're up 50% from just February of 2020. 2020. So I don't even think. Yeah. There we go. 166.5. So now we're 250. And days on market, what we're seeing is that it's drifting higher. We jumped up from 10 back in July, but then now we're 18. And this is a bit higher from where we were, but we're lower than where we were last November of 21. So homes are selling a little bit faster, but you got to take it with a grain of salt because we're almost halfway through November. So we still could see changes in these numbers. And homes are still selling is what this is telling us and letting us know. And then once we dive into consumer confidence, we see that's dipping. So this is a little bit more into the weeds of it, but the University of Michigan's Consumer Sentiment Index, what we see is that number declined from the previous month, coming in at 50.3 in November from 53.6 in October. So that's where it gets a little wild. Incomes are still up. People's spending still up, and employment here in Oklahoma, it's been holding up pretty strong. Here's job openings versus unemployment. This is locally for Oklahoma, and there are just over 100,000 open jobs, while we see the unemployment line slowly declining down around that $60,000 mark. So like I said, pretty strong here. And then when you look around the country, people feel broke, and the data says otherwise. It's probably more of an affordability pressure. Who knows on that? Higher payments, higher insurance, higher everything, to be frank. And even if your paycheck's bigger, it doesn't stretch the same way it used to. How much does a honey bun cost these days? And when people feel broke, they hesitate. They decide to kind of wait a little bit longer. And that's why we've seen that listings are now sitting longer, and why you're not seeing as many bidding wars. Now, they still are out there. They still exist. It just kind of depends on how you're marketing yourself. Are you positioning yourself as the obvious choice? I could help out with that. But again, it's not a crash. It's just sentiment. The fundamentals are still pretty solid from where we're looking at. Now, let's talk about supply, because we're still short on homes around the country. There's a ton of homeowners locked into this 3% mortgage rate from just a few years ago who they never want to sell. So why would you? So a lot of people are deciding to just stay tight. So even though demand has cooled, supply, on the other hand, let's go to months of supply on the data sheet real quick. This one's crazy, because months of supply has exploded 650% from January of 2022. So yeah, we exploded, but we're just back to more of a balanced market after having dangerously low levels of supply. Can't be like that forever, and it gets really dangerous when it's that low. So that's why prices aren't falling like some people on TikTok are predicting. And then as for new construction, we see it's still pretty expensive out there, and builders are dealing with expenses of their own, with insurance spikes and labor shortages and regulation costs. So they're not going to just flood the market with cheap homes immediately either. So in order to sell what they do have, some of them are even taking losses, like D.R. Horton and Lennar. They're offering rate buy downs, price cuts on their current supply. And like I said, they're taking losses on their inventory just to get some of this stuff sold. So that's why the market's stuck in this weird neutral setting, because we got like these one-offs happening like everywhere. And it's really hard to navigate what's going on. And I think right now would be a good time, because if you're watching this and you want clarity, like, Joel, you're kind of getting into the weeds of this, you might be going a little too fast for me. What does all of this mean for my neighborhood or my goals or my house? Feel free to give me a visit. You could check me out, joelshakur.com. You can find out all my contact information, a little bit about me. I'd love to help you out with anything if you need it here in Oklahoma City, Oklahoma County. But that's my little pitch, and let's get back into it. So if we zoom out for a second, and this is the New York Fed's survey of consumer expectations, what we see is for consumers, the median inflation expectations decreased. So that's a good sign. And it decreased to 3.2% at the 1 year horizon. So this is looking 1 year out. And then wages, if you scroll down, you click earnings, we're on the labor market chart, earnings growth. We see that wages are expected to rise around 2.6%. Now, you don't need to be a rocket scientist or an economist to do the math here. Prices are still outrunning paychecks. And that's why everything's feeling tighter. Gas, groceries, all of them are up. And it's all connected to housing because this eats away at your DTI, your debt to income ratios, which is the thing lenders care about the most. So even if the Fed does cut again this winter, that'll be our third cut if we get it of this year, that doesn't instantly fix the affordability issue and the supply and demand constraints. It just sets the stage for 2026 as we head into it being the reset year. Not a crash, but more so like this clean slate that will likely see more volume in transactions, more than we've seen this year. So here's what makes Oklahoma City different. We're still seeing inbound migration. People from some of these higher cost of living states like California, New York, some of them are noticing here as like a hidden gem, and they're choosing to live here because we're one of the last places that you can actually buy a home without needing a trust fund. And when they saved up some cash over 10 years living and working in some of these other states, that's a nice little nest egg to bring here and just throw into a nice little property that could potentially be seen as in discount. Never know though. Like I said, if you need help with anything. But some of the industries keeping us alive right now, keeping this job market strong, like we were just talking about earlier, were energy, aerospace, and logistics. Those industries that are really helping to keep our economy stable. And that's what's reflected in housing. When other metros correct, we just flatten out. And if you compare the price to income ratio across all major cities for the bottom large cities, Oklahoma City is still in one of the top 10 most affordable in the entire country. We're top 4 on this chart, which is insane when you think about how much prices have risen nationwide. So like I said, hidden gem. Now, this is one of my favorite parts we're about to get into, the money psychology side of things, because I like talking about stocks on this channel. And what we see is that stocks are near record highs, and that's giving higher income buyers confidence again, or people with retirements, or anybody that owns stocks. They're all like participating in this uptrend on this graph we're looking at on the screen. And when consumer sentiment's weak, it's crappy out there. People with these portfolios are spending strong because they feel wealthier. That's the wealth effect that comes with stocks. When people's assets go up, they feel richer because their 401ks, their investments, they're going up. They're at all-time highs, and everybody's like all-time high, all-time high, all-time high. I wish I could count how many videos where I've talked about a new all-time high this year. It's making them more likely to buy things like homes because they feel better, they feel more wealthy, they feel rich. And that's why when we look at some of these other price ranged homes like the Oklahoma City market segment for the 500,000 and up, it's not like the median home prices, but it's still moving pretty well. And then meanwhile, builders and agents are quietly repositioning for when rates dip again, because once that happens, you'll see volume shoot up pretty quickly and they want to be ahead of that. So let's pull everything we talked about together, all of this together. This is where we're at, everybody. The Oklahoma City housing market, it's not crashing, it's calibrating. Rates are easing, inventories rebuilt back to normal levels for now, and prices are holding pretty steady because people just simply aren't selling. So that's your Oklahoma City housing market update. I appreciate you for watching, everybody. Don't forget, like I said, if you did need any help, I'll display myself one more time, joelshakur.com. You can find my contact information. Check out my website. I'm here to help you out if you need it. Feel free to reach out. But I thank you for being here, and I hope you have a good one.